The eyes of the entire financial world are fixed on one date, February 25th. As the closing bell rings on Wall Street, NVIDIA, the undisputed king of the AI era, will release its fiscal Q4 2026 earnings. This isn't just another corporate report. It is a global litmus test for the sustainability of the AI revolution. In a market caught between AI gold rush excitement and capital expenditure bubble fears, NVIDIA's performance will set the tone for the entire tech sector. Let's talk numbers. Market expectations are sky high. According to FactSet, analysts are bracing for a massive revenue leap to $66.11 billion, a staggering 68% year-over-year increase. Earnings per share, EPS, is projected at $1.53, up 72% from last year. To put this into perspective, let's look at the previous quarter, Q3. NVIDIA then shattered records with $57 billion in revenue, driven by a 66% growth in data centers. While margins slightly dipped to 73.6%, the sheer dominance in AI infrastructure and gaming, which grew 30%, proved that NVIDIA is firing on all cylinders. The real star of the show is Blackwell, hailed as the most powerful AI chip ever built, with 25 times the inference speed of its predecessor. The demand is unprecedented. Blackwell orders for fiscal 2026 have already hit a mind-blowing $500 billion. It now accounts for 2/3 of NVIDIA's data center revenue. UBS estimates Blackwell alone will contribute $9 billion this quarter. But investors aren't just looking at today, they are looking at Rubin. This next-generation architecture is already in production. Goldman Sachs expects Rubin shipments to begin in Q3 of next year, securing NVIDIA's growth trajectory through 2027. Top analysts remain overwhelmingly bullish. Goldman Sachs maintains a buy rating with a $250 price target, noting strong capex from US cloud giants and solid supply chain data from TSMC. KeyBank is even more aggressive, setting a $275 target, highlighting improved demand in China and the massive rollout of the H200 and Blackwell chips. Stifel's Rubin Roy sums it up perfectly. Despite bubble concerns, we are in a clear trend of accelerating demand. The consensus? NVIDIA isn't just meeting demand, it's defining it. However, there is a catch. Options pricing suggests a possible 6% price swing following the report. Here's the strange part. In 3 of the last 4 quarters, NVIDIA stock actually dropped the day after reporting beats. Why? Because the market is becoming desensitized to surprises. As Jay Woods from Freedom Capital Markets notes, this is now a game of market psychology. Investors are no longer just asking how much did you make? They are asking how much more can you possibly grow in 2027? Tomorrow is the moment of truth. Will Blackwell's massive order book be enough to satisfy a hungry market? Or will high expectations lead to a sell-on news event? One thing is certain, NVIDIA remains the heart of the AI ecosystem. As the market prepares for these results, all eyes remain on NVIDIA's ability to sustain this unprecedented momentum. The numbers released tomorrow will undoubtedly shape the narrative for the tech sector in 2026. Thank you for watching our deep dive into the forces moving today's markets. We will continue to monitor the evolving AI landscape.